I completely liquidated all of my retirement accounts. When I got into real estate, I had zero money. My parents hated debt. Nobody around me in my squadron when I was a pilot wanted to talk about anything other than, TSPs. And I needed more income, or I wanted more income.
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Mark-Ian Sitch, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too. Welcome, everybody, to let's call it the relaunch of the ADPI podcast, and this is going to be the first ever, what we're calling, community podcast. All right, I'm coming to you live from St. Petersburg, Florida. We have some amazing guests here, and the reason why we're doing this is because there are topics that our members are pretty, passionate about. Our members want to know how to best use the TSP, and sometimes our members get pretty aggravated when I say that I'm a bigger fan of real estate than I am of the TSP. And so I want to get different perspectives on the pros, the cons, how to properly use it, and how can you either pair it up with real estate, or would you prefer it to real estate, or are you going to be a real estate maximalist and say that's all I want to do? So we're going to have some various perspectives, opinions, and personal stories. So we got Nolan, Scott, and Tracy here. Thank you all for coming along on this, our first ever community podcast on such a hot topic as the TSP. I know most people think it's a boring topic. Oh, you just put money away into a G fund, but we're going to make it exciting today. We're going to talk about how you can leverage it. So I'm going to go clockwise on my screen here. Tracy, can you do a quick little intro for everybody?
Sure. Thanks, Mark-Ian. Good morning, everyone. I am Tracy Lewis Cumberbatch. I'm retired now, but I was active duty Navy for 22 and a half years. Retired a couple years ago and have been full on into real estate syndication since then, buying multifamily apartment buildings and leveraging my TSP to help me do that. So I'm here today to talk about, how I was able to use the TSP to get into real estate, but maybe a bit later in the game than some folks.
Awesome. Okay, so you actually, the TSP was a part of your like you said, you leveraged it and you moved
Yes.
into real estate with that. That's awesome. Nolan, what about you? Say hello.
Hey guys, Nolan Payne here. Active duty Air Force for about 13 years or so. I would say I've been in real estate for a couple of years, still pretty new to it. I have a couple of single family rentals, and right now I'm working very hard to get into commercial real estate. Taking the cohort is one of the steps that I did. I've been contributing to TSP my entire career. I've learned a lot of things throughout it as well, and just learning this general information has helped my TSP grow. So that's why I'm hoping to contribute back to it as well. So yeah, I'm just honored to be here.
Awesome. Thank you so much. And so it sounds like we got two commercial real estate investors on board. That's awesome. Scott, what about you?
Well, I am ex-Army, and unfortunately for me, I never got to really invest in the TSP. I was only in for 2 years before I got injured. So, however, I am here today to basically go over, I do wealth management, financial planning, investment portfolios for individuals. That's what I do. So I'm here to basically talk. I deal with a lot of veterans, and my goal is to go over potentially risks versus rewards and the differences in investing in different funds within the TSP, outside investments, and how you can leverage the TSP with, let's say, a Roth IRA or a self-directed IRA,
Right.
and how beneficial, if you're looking for that, for the real estate, what to watch for in terms of, doing your due diligence.
Absolutely. Okay. So I think we're going to have a very fruitful discussion, because this is about, a lot of people say you got to diversify, right? I would say you need to have a strategy, right? You need to know what you're going to do with how you're investing stuff. Even like diversifying isn't going to help if you have no method to that madness. So let's obviously, and it's not a one size fits all, right? A lot of our members are going to have different strategies because they have different goals. So when we go through strategies with our members, we're like, okay, where are you at right now? Where do you want to be? What's getting in the way? And we kind of have our frameworks. We bolt that on. That's how we do our cohorts. But honestly, everybody's different. So we're probably going to go through through several different, maybe let's call it like frameworks or ways to approach it. One is, investing in just the TSP traditionally. And like you said, I think Nolan earlier, like the G fund isn't exactly the best route to go, right? What do you think was the most successful, just looking at the TSP itself, like in just a soundbite? If somebody's listening to this and they're like, okay, I'm doing it, I'm active duty still, I'm contributing. What's like the 80-20 principle? What's the best way to just optimize it?
So for me, this is my personal strategy. I've heard the 80-10-10 or the 60-20-20. I'm sure Scott can speak on this too, but it's the C, S, and the I fund that I contribute into, and I don't want to misspeak on those, but the different funds will follow the S&P 500, but those are basically like your stocks, things like that. So that's where the G fund, as you mentioned, is more of like your bonds. So Scott had said earlier, hey, younger, you can take a little bit more risk and you can invest in those CS and I funds. And then maybe when you get a little bit older, you want to transition to some bonds. And then there's also the life cycle funds that we didn't touch on.
Got it. Okay, so you said 80-20-20, just real quick. Can you kind of explain what that means?
Oh, sorry. 80. So there's two 80-10-10 or 60-20-20 because it has to equal 100%, right? So that's
okay. Okay, that makes sense. All right.
So you could do 60. So you could do 60% in the C fund, 20% in the S fund, and 20% in the I fund. And the I fund being international. That's kind of diversifying that versus the S&P 500 versus the international funds.
Got it. Okay, makes sense. So that part of the diversifying has, well, like we said earlier, a method to the madness. There's you're not doing the bonds. You actually want to have something that grows, and you kind of like apportion it in a way to where it's not just random to you, right? You have 60-20-20. That's how I want to do it, or 80-10-10, and it's probably one is probably a little bit more aggressive than the other, right? Right. So
right.
That's
Yeah.
what you're basing it off of, and probably later in your years, you're probably going to want to scale back how aggressive it is.
Right. What I've seen a lot of financial advice out there, and like I said, I'm not a financial advisor, but typically, people will tend to transition from the stocks to the bonds as they get closer to retirement age.
Okay. So now that we have general overview, somebody listening to this, they heard the word TSP, they want to know just all right, what are the buzzwords? What do I need to do to make sure it's not just G fund stuff? Now let's talk about implementing the real estate strategy with it. I'm going to come off with a little bit of a zinger. I completely liquidated all of my retirement accounts. When I got into real estate, I had zero money. My parents hated debt. Nobody around me in my squadron when I was a pilot wanted to talk about anything other than, TSPs. And I needed more income, or I wanted more income. Whatever the reason is, it doesn't matter. I was driven by that. And so I had an IRA with 33 grand in it that I started putting in money when I was still at the Naval Academy, and I called USAA and I was like, yo, I want to liquidate this thing. And the guy's like, I need to talk to my supervisor. He's like, I could tell he was like shocked. His manager comes on the line. He's like, do you know what you're doing? I was like, I listened to a few podcasts, read a few books. I think I know what I'm doing. And they needed me to sign 5 million things, call the president, all this kind of stuff. Finally, they let me liquidate it. They withheld a little bit for taxes. They told me there's going to be a 10% penalty on my earnings. I was like, I don't care. I need a down payment on my first property. And back then I thought getting into commercial real estate, large apartment complexes was way too scary. And so I bought a turnkey property, which we have an awesome partner called REI Nation that they do turnkeys, where it's a beautiful little bite-sized property. You can buy a 3-bedroom, 2-bath, and it's cash flowing day one. But so that's what I did. Now, had I known that I could convert that into something else, and we're going to talk about how the TSP can do this because Tracy sounds like you have personal experience with that.
Yeah.
I could have converted an IRA into, Scott, something you said, like a self-directed IRA or 401k, right? Can you explain?
Or you could have taken a loan.
Or I could have taken a loan, right?
Correct. Yeah, there's multiple things.
There's a lot of things, right? In
Correct.
which something I was just exploring the steps on how to take a loan out against your TSP, and it is so easy
Yes,
that I wish.
I did that as well.
Yeah. So we can touch on that here in a little bit too. But just real quick, when we're talking the self-directed part, what does that actually accomplish? What are you now able to do that you were not able to do? And just to clarify, it is still, tax deferred, tax sheltered. It is still the same vehicle, but how you can use it is different. Is that right?
Yes.
You're
So I can
asking
tell
me?
you what
Or,
I
yeah.
did.
Oh, okay. Sorry. We can
I
both
rolled
go first. Yeah.
I rolled mine into a self-directed account, which, like you said, it's still a retirement account. So none of the cash flow from these properties is coming into my pocket today. So it is important to note that it is still in a retirement account. But now I can use those funds towards private equity investments in real estate deals as a passive real estate investor. So I'm not using them for my own personal real estate projects. I'm investing in other people's deals as a passive limited partner investor with those funds. So those funds are invested in a hard asset in a physical real estate project. Somebody else is doing all the work. Somebody else is being the landlord. Somebody else is taking on all of that effort. And my money is just growing in that retirement account, but on a real estate asset instead of in the market.
Now, is that because, is there a reason why you're only investing in other people's deals and not in your own with your TSP
Because
funds?
there are very specific rules when you have a self-directed IRA account into what types of projects you can spend, and there are, you can put that money in, and there are very specific prohibited transactions where you cannot put that money into your own personal project or, your spouse or there's like a specific chart. I don't want to list
Right.
all of them off. That's not my area of expertise. Scott can probably talk to that a little more than I can, but just knowing that there is a very specific list of prohibited types of transactions. So before you go and roll your money into a self-directed IRA account, you want to be clear on, you hit the nail on the head earlier. The whole point of this entire conversation, you have to have a plan first. You have to know what your plan is and then utilize these tools to accomplish that plan. You don't want to start just moving your money around in all these different accounts if you don't know the purpose of that account and how you can use those funds to leverage into real estate.
I love that. That makes a lot of sense. And so basically, just to be super clear, there are specific guidelines. There are specific rules, right? You can't just invest in whatever you want. And in this particular case, what you found the best is investing in somebody else's deals and probably because you're able to vet them very well because you do real estate yourself. So that's part of your strategy. So you can really do good due diligence on what you're investing your hard-earned money in.
Yes, exactly.
Awesome. Scott, what do you have to add to that? As far as just maybe the conversion process, can we talk about that a little bit? How does that look? Hey, I have this TSP and I want to convert it. What do you do?
When you say converted, are you talking about just transferring to a self-directed in terms of that?
Sorry. That's the correct word.
So, what I do is from a fundamental standpoint, most people look at the growth before anything else of what they want. Whereas as a financial professional myself, I have to look at the risks before anything else. So what I say is what I always go to first is what is your opportunity cost? What is it going to cost you to roll it into a self-directed IRA versus what you're doing now? Okay. And, speaking to a financial professional and so forth is probably a good idea to get, when it comes down to fees and transaction costs and all that kind of stuff, which of course, when you're talking about regulatory bodies, that is first and foremost on their plate. How much fees, make sure you're not doing the wrong thing or you're not being manipulated to do the wrong thing first and foremost. So doing a little due diligence yourself is always key. However, I have a lot of clients that I have actually converted from TSP to self-directed, as you said, or transferred, rolled over. And there's a lot of benefits to that. And the biggest benefit is you just have so many more options, first and foremost. Your options are, I don't want to say limitless because, as Tracy stated, there are a lot of rules and regulations which apply. And if you're using that for a specific purpose and you know what it is and you've thought that out, you've planned a strategy, then absolutely, I think that would be a definitely great way to go. If you're talking about getting rid of the TSP altogether, okay? Because you can also use the TSP, and as Tracy and I were talking, you can, and we were saying, you can also create a self-directed IRA on top of that, right? So when you're talking about rolling
Right.
that into a self-directed IRA, you get many more options. Bottom line, I mean, that's what it boils down to. As long as the cost of the program that you're involved in, like the financial advisor, what a lot of people make the mistake of thinking is, I deal with a lot of clients that go to another advisor and they say, oh, I wasn't charged a fee for this. And then I look up their account and the fund was an A share and they paid a 5% commission and they didn't even know it. And they're sitting there telling me, I didn't do that. And they're paying fees. So you had a
Right.
question.
Actually, just quickly on the topic of fees, that is
Yeah.
one thing that I'm a huge fan of about the TSP. Like everybody knows, like I'm a real estate maximalist, if you will, but I I love the TSP in that how available, easy it is for the military, and that it's like what 0.65% or something like that fees. Not
Depending on the fund, yeah, it's ridiculously cheap.
It's ridiculously cheap. And just so everybody, just here's the one thing: if you take anything away from like Tony Robbins isms with finances, is he talks about, we all know that the eighth wonder of the world is compound interest. Well, the worst thing then is the counter of that, and that's compounding fees. And
Right.
that will cost you 6, sometimes even 7 figures. Even if it's only 3% over 30, 40 years, you're losing ridiculous money, because that gets taken out on whether you're losing money or making money. And so,
If I,
yeah, go ahead.
no, sorry, I didn't mean to interrupt you. I
No,
apologize.
you go ahead.
I was just going to interject and say that this is a very important conversation, and not just about the TSP, about all funds.
Right.
Okay. And so just to elaborate a tiny bit more, in terms of fees, like people don't even realize, like if I asked any of you, does any of you know what the turnover is in a fund?
Actually,
Oh,
please educate us on that.
okay. So people are looking at
Educate
the
me.
fees. Yeah. So people are looking at the fees in the fund. The expense ratios is generally what they look at, right?
Right.
And that doesn't include A shares, which has a commission, a front end load, or, C shares, which have a back end load, or D shares, whatever it is. And they don't realize that money is not included in their fee structure. It comes right off the top of their amount. I don't know about you. I've had clients that have come to me and said, Scott, we have had this fund for years. It's earning such and such a percent, so it says, but we're not making money. I don't know if any of you can relate to that, but there's a lot of people I talk to that say they're getting decent returns, but they're not making any money. And the
Huh.
reason is because of those compounded fees that you're talking about. For
Right.
example, if a stock fund has 100% turnover, which nobody looks at, we have to read the prospectus. Funds are not transparent on their brokerage costs and transaction fees. And even though they might be minimal, they're adding up to that much more on your expenses. So all of these things need to be taken into account, and nobody thinks about them because most advisors, and companies, unfortunately, are not transparent. Funds don't have to be transparent in those transaction costs. So you really need to know exactly what you're paying when you're doing these kind of things, especially if you're going to work with an advisor, because then you have not only those fees and commissions, and if you're working with an advisor like myself, which I generally do not buy funds, right? I will buy stocks and build portfolios for people to get rid of those fees. You're also paying that advisor. So you could be paying upwards of 1, 2, 3, 4% a year and not even know it.
Yeah. And it goes, I mean, just going back to the initial point we all kind of made was the strategy here. And so for the purposes of this conversation, it sounds like, if I were to make a billboard about this, or just a little bit of or a little infographic, is like, if you're in the military, it's pretty dang awesome to get that 100% matching. And it's pretty dang awesome as long as you're not in the G fund, to kind of spread that money into the other funds, 60, 20, 20 or whatever, because you're not paying the fees as much as others are. It's really super inexpensive. And you're going to be able to roll this over into a self-directed IRA or 401k. And so now let's talk about the value of real estate and why that's something you'd want to do to then invest into real estate out of that fund. Why I'm such a big proponent of real estate is mostly because, well, and this is an interesting topic, because like actually Tom Wheelwright will say, well, don't invest in real estate. from your solo or 401k, because he's like, you're basically putting a tax shelter inside of another tax shelter, and he's like, what's the point? But I like it for the tax benefits. I also like it for the fact that I have other people paying off this asset. I have my tenants paying off the asset, plus it's appreciating, plus if I do it right, it's going to be cash flowing, which in this case would be going into the fund. And I'm hedging against inflation, because the rents go up as inflation happens, right? So I'm a huge fan. So for me, real estate would be the number one choice. Tracy, when you were choosing like your deals, what were your like primary criteria for choosing these deals? Was it simply like did you look at it the same way as if you were operating it, or no?
I think for the most part, yes. So for me, I when I'm looking at investing from my retirement account, from my self-directed IRA, I'm a little less concerned about cash flow, right? Because that money's not coming to me. It's going back
Exactly.
into the retirement fund. So I pay much closer attention to the equity multiple. And
Mm-hmm.
so I really like deals. To me, my sweet spot is like 2x in 5 years.
Yep.
And the reason that that's sort of like my anchor point is when you compare that to traditional market returns, right? If you say the market on average, the stock market, I'm referring to the stock market, on average returns are 8, maybe, conservatively, most people will say around 8% average over time. Maybe, you could say 10% if you really want to be a little aggressive with that. And so if you look at those numbers and you use the rule of 72, if you're getting an 8% return, it's going to take you 9 years to double your money. If you're getting
Right.
a 10% return, it's going to take you 7 years to double your money. Well, the projects that I'm investing in are getting a 14% average IRR, which translates to doubling my money in 5 years instead of 7 or 9. And so when you look at that in a cyclical perspective, if I'm planning on not needing those funds for another 15 to 20 years, realistically, when I retire, like retire, then,
I know what you mean.
that's like at least 3 cycles, if not 4, of 5, 5, 5. So that means I can double my money 3 times in that 15-year cycle versus doubling my money only twice, if I'm lucky, in the, in the marketplace. So that's the way that I look at it, specifically when I'm looking at those funds that are in my retirement account, where I'm not worried about cash flow. I'm just looking at, okay, if I left that money in the TSP and I had it in the 80-20 split between the C and the S, which is a fairly aggressive, way to do it, and I get an average of 10% over the next, 15 years, that's still only going to double my money twice. Whereas if I put it in this real estate where, like you said, it's a physical asset, it's hedged against inflation, all these different factors, and I can do it 3 times in that same period of time, well, heck yeah, I'd rather double my money 3 times instead of just 2. So that's, to me, like, that's the way that I look at it.
Yeah, and the doubling there, it doesn't mean like adding the same. You're literally like, that's compounding doubling, and that's why
Right.
Patrick Bet-David talks about how wealth is a doubling game. He goes, all I care about is how quickly I can double, and then I want to build on that. So I love that. That's a very powerful yet it's a very simple way to be able to just like, that's your simplest rule of thumb, but it's probably the most powerful. So I love that. Now, let's talk about what you want to do for like long term. So Nolan, what do you want to do long term when it comes to either real estate or TSP or an IRA? Like, how do you want this to play out ideally?
Yeah, it's a good question. Real quick, I wanted something I think we didn't forget to mention was the contribution yearly limit is a lot higher in the TSP than like a lot of the IRAs. I wanted to
True.
throw that out there.
Yeah.
That's an advantage. But I think what we're kind of getting to is this TSP loan option out there to invest in real estate, and kind of what Tracy was saying about multiplying your equity. And what Scott was saying about opportunity costs. If you wanted to take a TSP loan and invest that into real estate, there's an opportunity cost, right? Like the biggest opportunity cost, from my understanding, is you're not making the growth in your TSP because that money is loaned out and you're having to pay back in interest. However, if you do, like a 5-year deal, like you said, and you do multiply your equity in 2 times, then that's the opportunity cost right there, right? So you have to be sure, tying in all things together, you have to be sure that this strategy, that this real estate asset that you're going to invest in is going to actually have the payoff of that 2 times percent equity. And then you pay yourself back in the TSP or a self-directed IRA. And then, so long-term strategy, that's how I kind of look at it. If you're taking out like this, using the TSP loan, it should be, like you said, to multiply your wealth.
Yeah, and on top of you're losing that because you actually are taking that money out of the growth when you
Correct.
take that loan,
Yeah.
right? You're not borrowing against it, right?
Mm-hmm.
Just wanted to, and Scott, am I right? Like, does everybody agree with me? Like, I'm not messing that up, right? You're not borrowing against it as collateral. You're literally taking that money out of the game when you borrow from the TSP, right?
Mm-hmm.
So
right, and then the interest rate that you're paying is the G fund, and you're paying that to yourself, so you are making the G fund rate on those funds as you put them back. But while the funds are with you, they are not in the account growing and compounding. So you lose out on the compounding on those funds when you take a loan out.
Right.
So I want to caution all young service members to not take out a TSP loan to buy a new Camaro, like at 17% interest, because that's what I see a lot of people doing. I want to throw that out there real quick. The point is to have an asset.
Yes. Okay. So here's the hot part. Okay. Why do a retirement fund when there's real estate? And I want to reiterate and obviously, and I can give you a few more stories, and I'm not saying that my way is the only way. People would probably shoot me if I was like, hey, like real estate is better for everybody. Because the reality is it is not better for everybody. If you dedicate enough time and attention in being a student of that craft and that becomes your strategy, yes, you can be very successful in it, right? But if for example, everybody's situation is different. If you're in the military and you're like, no, like my primary strategy is to hit 20 years, and my primary strategy is to focus on my job and be the best at that because that's what brings me joy, and I want to just put money into the TSP, and eventually I'll roll it over and probably diversify a little bit into some syndications like Tracy is doing. But so I'm not saying it is for everybody. I'm just saying that I think whatever you really put your absolute effort and mind into and you strategize around that, that's what's going to be the best for you, right? And so for me, I knew that I wanted to become, very prolific in real estate investing. And so it did not serve my strategy to keep my money in the TSP, period, or in an IRA, period. I've already proven that to myself because I've done more with it than I could have elsewhere. So that was the whole game for me. So, but as soon as I'll say something like, say goodbye to the TSP. As an education company, ADPI's whole goal, this is how I look at it, is we have to get people's gears turning. I'm not trying to convince you to do it one way or another. I just want you to know what else is out there. And if I do not say it out loud, people won't even think about it because you're in your little echo chamber, in your squadron, in your unit, and everybody's just, investing in the TSP and that's it. Which again, that's fine. But then ADPI is not doing its job. Our mission is to impact 3 million military families through real estate, positively in their finances. So I'll tell you one more quick story. Is my parents had 529 IRAs that they saved up for my siblings. But my parents also did not have anything as far as cash flow, pension, retirement plans, right? They did not have a pension, right? That's an asset too. They didn't have any assets that were going to give them income every single month. And to me, early on, I got really just hesitant about this concept of saving up money and just drawing on it and having that potentially whittle away. Because I felt like I'd be one misstep away in future me of like ruining the way I really want to retire. And I kind of bought into this life as a cash flow game. I want something that's just producing me income every single month. And so I talked to my dad about that. who is extremely traditional with finances, not interested in debt, hates debt. And I said, hey, let's go get $2 million worth of debt. Let's liquidate these IRAs that you've saved up for my siblings. Sorry, brothers and sisters. Pay for college year on your own. Because I was like, look, you guys have 7 kids. I'm the oldest of 7. You guys are going to watch us have our children, and you're not even going to be able to visit us. Like, how? Like, maybe your ability to be present with our grandchildren. This is just how I was thinking. All right, so I'm just telling you this. Maybe you being present with our grandchildren is something that's more valuable to you than having a few of your kids have their college paid for, right? Or maybe if we really get good at real estate, paying for college is going to not be an issue at all, right? So how do we want to stack this deck? And so I actually did convince my dad after a while, and we made tens of thousands of dollars of mistakes and overpaid for our first property, but now it's making him more than his professor salary. So like, it was not easy, but that's why I'm talking about strategy. That's why I think it's a really important thing to explore how you want to use the TSP or not, or how you're going to leverage it into real estate. Does anybody have any thoughts on if it was your prior self, what would you do with the TSP? Would you do anything differently?
Yeah, I have a couple thoughts on that. So first, I think, you really honed in on what is the most important piece of this conversation, which is you have to know what your goals are first. You need to know, like, what are you trying to accomplish? What's your why? Like, is it that you want more time freedom so that you can spend time with your family? Or is it because you're really passionate about providing housing for people? Or, like, what is your reason for wanting to get into real estate, and kind of, do you want to position yourself as an active real estate investor or passive? Like, you need to know kind of where you're going with that. Once you have that, then you can really leverage TSP, particularly in the early years in the accumulation phase. And I think that's where if I could go back and do something differently, I did not invest in TSP for the first 5 years that I was on active duty. It was right around my 5-year mark, but I was like, I probably should start putting some money away. Like, I was getting into like my late 20s, and I was like, probably should start, investing and saving for retirement, So at the beginning, I think I was only putting like maybe 5%, and I'm way before BRS. We didn't get a match or anything. It was just like, put some money away. And so I think I started with like 5%. But then what that did for me is it started working that muscle of paying myself first, of saving money for the future, of changing my mindset of like, I'm not going to spend my entire paycheck on whatever I want to buy right now, right? It was that first step of like thinking bigger, thinking more long-term, and really starting to work that muscle. And so then every time I got a pay raise, every time the new year came around, we made a little bit more money, or if I made rank and actually like jumped up in my pay, I split it in half. So whatever that increase was, I increased my contribution by that much, and eventually got to the point where I was maxing out my TSP every year. And I did that for the last few years until I retired. And so what that did for me is it gave me options. And I think that's the biggest thing, is recognizing, like, are you early on in that accumulation phase where, if you've only got an extra couple $100 a month to put away, put it in your TSP, get that match. If you're not at least putting 5% in, you're leaving money on the table. The government is going to give you a free match of that 5%. So if you can at least put in that 5%, get the match from the government, and let that grow.
Yeah, 100% return, right?
After a few years, or, that first decade or whatever, like, if you decide to stay in, then you can leverage that to do like you did, pull it out, use it as down payment on real estate, and go all in on real estate. Or you could take a loan, or you could get out, roll it over into a self-directed IRA, and just let that keep growing, in real estate passively while you do other things. Like, it just really gives you options. And so I think when you approach it from that perspective of like, am I in the accumulation phase, or am I in the, now that I have this little nest egg that I've built in my TSP, how can I best leverage it to propel me forward? And I think for me, like, I didn't really get into real estate investing until very late in my career. And so the decisions that I made and what makes sense for me might be different than somebody who's, much earlier on in their career having these conversations. But I think that's what I would do differently, knowing what I know now, is that I would have tried to maximize how much I was saving to build that little nest egg faster, to be able to have more to dump into something when I was ready. Yeah.
Yeah. No, I love that. I think that was just extremely sound advice. And I actually, because you mentioned real estate again with what you're doing, I would like to talk. I'm going to give everybody else like their own personal opinions on this, but I do, before we leave, Tracy, we got to touch on the capital raising part. How can you leverage this stuff with capital raising? Because I know we're going to have a call in February also, and I'm definitely planning on talking about self-directed when it comes to capital raising. But Nolan, Scott, anything you guys want to add? Like, what would you do differently, or do you feel like you crushed it?
Go ahead, Nolan, you first.
Um, I think all the points you made are super valid, Markian, about, hey, taking it out. And I just think, a couple of big picture views here. Your average day American isn't saving for retirement. I mean, the statistics, when you look at it, are probably unsettling about how many people aren't
Yeah, alarming. Yeah.
looking for their future. So, and I think I caveat that to say it is a tool. Retirement, TSP, and all these things, they're just tools, like Tracy said, to get to your goals, right? A lot of people, like your traditional finance mindsets, they're just, investing, but they don't really have a plan. They, it's just like someday, some pie in the sky. Hey, when I get to a certain age, I'm going to start taking this money out. Maybe, life happens. Maybe the life, things change. But you need to like really sit down like with somebody like Scott, and you need to have these conversations of how much money do I actually need? I don't need to save. Maybe I don't need to save my entire paycheck. Maybe I only need, 1 mil, three, whatever I need, however my cost to supplement my income. It's a tool, right? So I think that's when you were talking about just how can we give general advice to members, it is just a tool. But if you, it's just like anything in your toolbox, if you want to turn that tool into another tool and use it into leverage it into real estate, you certainly can do that. But I think another key point is, especially when you're just starting out, the TSP and the retirement, it's an asset that you have, so it does help you qualify and go get debt and go get mortgages. At least for a lot of conventional lenders, my couple of mortgages I have, I couldn't have got it without having money, showing, hey, in my my personal finance score, I have this money here, unless I'm going
Yeah.
private money. So I think that's a big thing. You can't really just, just go 180 immediately. Eventually you can, but
Yeah. I love that you tied it back to real estate again in a different fashion, because that is absolutely true. I think every underwriter has different rules depending on the kind of loan, but I've seen it where sometimes they'll count 2/3 of it towards your liquidity, and sometimes also 2/3 or all of it towards your net worth. So that is huge. And by the way, what he's talking about, guys, a PFS, a personal financial statement, is essentially a way that you can figure out how well you're doing. What is your net worth, right? And that is, some people would say, arguably the most important number to track, because at the end of the day, that is the scoreboard, right? I kind of like still looking at the cash flow a little bit more, but still, that is the ultimate scoreboard of what you're able, like how much like financial power you wield, if you will. Scott, anything to add before we kind of move on to
No,
capital raising and wrap it up?
no, Nolan said it. Nolan said it. The net worth, even in my industry, one of the most important questions we ask clients is what is your net worth, right? Because even if you have a large net worth, you still might be, suitable for certain investments that somebody with a low net worth isn't, right? So net worth is absolutely key in determining risk factors and what you can handle financially as opposed to what you can't. And in terms of, for example, like when you're thinking about dealing with real estate as a part of your overall portfolio in terms of investments, when I look at real estate, it's a beautiful thing, right? If you have your TSP and you're like, well, because the TSP does not offer great any real estate options. They might involve, obviously invest in real estate investment trusts and so forth, but that's not really, to me, that's not real estate. That's not the
No,
asset.
that's a
You want
stock.
to own the asset, right? However, like yourself, right? So if you were like, Scott, I want to go ahead and liquidate this, I would have said, okay, you understand the risks of putting all your eggs in one basket when they talk about diversification, right? So diversification to me does not mean owning a mutual fund or a fund with 1,000 different stocks in it, because you're only diversified amongst something called unsystematic risk, but you're still in equity. So if the equity market drops, you're still going to go down. Real estate, if you can tie in real estate to an investment portfolio, real estate, we all know, is one of the strongest investments in history, right?
Mm-hmm.
And that is a non-correlated asset to the stock market. Okay.
Right.
It
Right.
is
I
a
see what you're saying.
hedge. It is a hedge to the stock market.
Mhm.
And I firmly believe, again, which is why I wanted to come on this podcast with you, in terms of TSP and military, I know for a fact military people do not get good enough financial training. They don't get any financial training,
That's why
you
we
know?
exist. Ding, ding, ding.
Right. So I deal with that a lot. And the thing is, now I am not an expert when it comes to transitioning into a real estate from a TSP, okay, and doing that, okay. My expertise lies more in the asset management of your overall portfolio and that kind of thing.
Right. Right.
So what Tracy is doing and what Nolan is doing, if that's a part of your portfolio, just understand what I want people. If you're planning on doing all of it like you did, I mean, that's a risk too, right? Because
Of
then you're
course.
relying
Yeah.
solely on the real estate market, right? And what I think most people don't get is they don't think about the volatility involved in the real estate market if it happens, and the stock market if it happens. So what I would always say is, you know, look at what you can handle before going full force into something. If you put a portion of your assets into real estate, that is a magnificent thing, especially if you own them. And that is a great, great asset to have long term, right? So
Yeah.
that's, in terms of that, that's what I would say.
I think you're absolutely right. Like the word, like what you can handle. I think that's absolutely correct. I know I do those assessments. I will say, and this is where, and this is not a pushback against what you're saying. This is just my personal anecdote. When I inadvertently sometimes took on more than I could handle, I figured it out, and that made me into somebody I never would have been able to.
Right.
And so sometimes, what is it? Martin Luther King Jr. said, like, you don't have to see the top of the stairs to take the first step. Every single time I stepped into a higher confidence level or growing in experience or growing personally, it was not necessarily completely planned. And it was because I was faced with adversity that I was not anticipating. I have like this problem where I think things are going to be easier than they are always. I don't know if you guys ever face that. So, and I'm just eternally excited about the next step with stuff. So I find myself in that position a lot, and it's not always super fun. But then I look back and I'm like, holy cow! I'm glad that happened.
What I would say,
Yeah.
sorry, I apologize.
No, you're good. You're good. And I don't know
apologize.
what you meant. I wanted to touch on that because that's something that I've been seeing a lot in my personal life. But I do those internal assessments too. I'm not being like, hopefully crazy and irrational and making,
No.
rash
You're
decisions.
actually touching on a great
Yeah,
point, I think. And I wanted to just,
yeah,
I wanted to give uh, like people out there more confidence, because someone like yourself, you can handle the risk, right? In my everyday life, I see clients that, they go out, they buy a stock, the stock immediately drops and they sell out. That's emotion.
Oh,
And
ouch.
that
Buy
comes
more.
back to, and listen, my friends do it. I'll tell them, they'll ask me, what are you buying? Whatever. And I'll tell them, just because they're my friends, and they'll go out and tell me they bought it. And I didn't even let them know. They didn't ask me what the strategy was. Like you said, that's where strategy comes into it. So what I would just say is, listen, if you can handle Like, because there's no guarantee in anything. If you buy real estate and then all of a sudden it drops 20%, the real estate market, can you handle that? Are you an investor investing in bonds, but you want to buy real estate? You know,
Scott, I
think
love it
about
when real
these kind
estate
of
drops
things.
in value.
Well, yeah, so do I. But the thing is, you need to know. But here's the problem: is most people don't.
Yeah,
They get
they don't
emotional, right?
tolerance.
So, and they lose because of that, right? Because they
No, I
don't have
know.
a
Yeah.
strategy, which is what you were talking about, Tracy and Nolan.
Yeah.
So that's, having that plan. What can you actually tolerate is very important. Absolutely. But yeah, having the strategy and what you said, I absolutely agree with 1,000%.
Yeah. Well, guys, thank you so much, but we're not done yet. If you guys can stick with me a little bit longer, I would like to talk about a slightly advanced strategy when it comes to capital raising. One of the big things that ADPI does is we try to teach people to kind of think outside the box. And one of those things is getting comfortable with asking people if they want to invest in an awesome opportunity with you. And for a lot of people, it's scary. I mean, heck, I asked, like, I'm gonna be honest. When I met, I was almost worried telling people in the early days, oh yeah, my parents invested with me, because I saw online so many people saying like, oh yeah, like Jeff Bezos got lucky, his parents gave him a $250,000 loan, that's how he started Amazon. And I was like, oh, are people gonna think that I was like that's me, that I took the easy route, But the reality is, and this is like a self-justification, this is for all you out there listening who are trying to like get the courage to ask your friends and family, or to just talk about money more openly. Like I had to get over that, and honestly, if anybody knows my dad, it was probably way harder to raise capital from my dad than from I'm telling you. Some of my investors, 2 phone calls, 6 figures wired. That easy. Actually, I'm waiting for some right now. $100,000 check. So to me, it's all about like my parents were a part of my strategy. They were my first investors, but it did create a lot of pressure, and it did create a lot of opportunity for both them and me. One of the ways we can raise capital is through what I think a lot of people don't even realize is you can raise capital from others by introducing them to a solo 401k or self-directed IRA, right? And so we have at ADPI, we have an incredible partner called Nevada Corporate Headquarters, and they work with a trust company, Horizon Trust. And what they do is they package up this whole situation for you to where you can bring your friends, acquaintances, whoever, and help them set this up for maybe a fund like an IRA or a 401k that they kind of don't even look at. They might not even really care that it's there, but it could have 50 grand in it. And you could go, hey, self-direct that. And I'm doing this awesome real estate deal. You barely even look at that account anymore. How about you invest with me? And to me, I think that's a very powerful strategy to get people to unlock capital, the $13.2 trillion out there that's just hanging out in retirement accounts. And I'm telling you, like, I have a few hundred contacts in my phone. If every day you pedaled that bicycle a little bit and you just like scrolled through your phone and you hit up 10 people, told them about an opportunity and said, hey, do you have a retirement account that you're kind of like not super excited about? And just see what's out there. So that's something I wanted to talk about. Tracy, have you ever done that by chance?
Yeah. Hey, I just want to double check. Can you hear me? Because my headphones.
Yes.
Yeah, you're good.
Okay.
Yeah.
All right. Good deal. Yeah. So I think capital raising is such a scary topic for a lot of people, and it definitely was not the thing that I defaulted to initially when I started doing this. I was like, nope, don't like sales, not for me. But what I realized is that capital raising is all about relationships. And so when we start to understand that we have access to these real estate investment opportunities, if we're excited about them, why would we not want to share that opportunity with the people in our lives that we love and care about, and want to make sure that they at least know that it's an option? And it's not always the right fit for everyone, but like you said, a lot of people have these retirement accounts out there that they're not super thrilled with the performance. They're from a previous employer. They're just like floating out there. A lot of times they don't even know how much money's in them or what's going on with them. They're just like, oh yeah, that was from my last employer. I don't really know what's going on with that. And it's like, you can use that money to be a private lender for other people's real estate deals. And I think that's where there's a lot of opportunity for people in this community to be able to leverage those relationships and help connect people who have deals with people who have money. And a lot of times that's really the gap, is like, there's a lot of people out there who have great investment opportunities, but they don't have enough of their own capital. And then you have it, like you said, there's like multiple $trillion sitting in these retirement accounts that people don't really know what to do with, and they don't want to just go buy a property and be a landlord. But if they could put that money in somebody else's investment and let them do all the hard work and just let that money grow, like, most people are like, yeah, that sounds pretty sweet. And so once you start to understand that bigger picture and realize how simple it can be to just be that connector, I really have embraced and leaned into this role of capital raising and investor relations, because it really taps into my baseline desire, which is like, I want to help people build wealth and pursue financial freedom. And if there's a way that I can very easily help them access that money that they're not really happy about its performance and put it in a vehicle that's going to deliver what they need, like, win-win all around, right? Like, who doesn't love that?
Yeah.
So that's really where I have focused my attention, is educating and making sure that people understand that they can take that money, they can put it in a self-directed IRA, and then they can lend privately. It works on the single family residential side as well. So like, if you're doing flips, any type of private lending, it doesn't just have to be syndications. And so a lot of people are like, syndications, I'm not sure how I feel about that. You can lend to a flipper. You don't want to just lend to any flipper. You want to make sure they actually know what they're doing. But there's a lot of opportunity in there to privately lend out of your self-directed IRA account. And so that's really, that's what I've been doing.
Yeah, the money I should be receiving today, for example, actually, that was from a previous investor who I doubled his money in under 2 years, who now is like, I'm getting a private money loan from him, and he's not even batting. He's like, oh yeah, where do I want? Like, so, it can be private money. I just love that you clarified that, because I forgot to mention that. It doesn't have to be necessarily into a syndication or into some investment. It could be, yeah, here's some money. I just want 12% return or whatever it is. Like, just pay me monthly, done. And so there's a lot of different things you can do with that. So that's really cool. And I want to foot stomp this. If you're listening to this, you're like, holy cow, I want to do, I want to self-direct, or holy cow, I'm trying to raise capital. I didn't think about asking other people to self-direct their accounts. Super easy way to do it. Go to our website, activedutypassiveincome.com. Shameless plug here for us and our partners. Go to the Top Notch Professionals. Nevada Corporate Headquarters is there, or NCH. They typically work with asset protections, what they're best known for, like setting up your LLCs and that kind of stuff. But just hit them up. It's just a quick little like opt-in, name, email, phone number, and then you can set all of that up with them. They'll help you. They'll walk you through. They'll even build a business plan for you if you need to. Now, any saved rounds on that capital raising stuff? Nolan, Scott, like, have you guys ever encountered this? Have you thought about raising capital by helping other people self-direct their stuff?
That's really all I do.
There you go.
Raise capital. I'm sorry, Nolan, were you about to say something? Did I interrupt you?
I was just going to comment. You really just blew my mind. I had never considered that, as a creative option right there, because I'm sitting here trying to potentially capital raise for one of my first deals, and I was just like, man, I could just tell people to, turn into self-direct. So that's just like mind blowing right there.
Just make sure you send them all my way.
Yeah. Well, yeah, we'll do. And then another quick comment. I think you're talking about the fear of asking your friends and family, but I honestly want to say it goes back to what you said about the pressure, right? If I was taking my dad's money, such as you did in your situation, I would be really, with anybody's money, I would be on my on details on my P's and Q's, but like, it was my dad's money, I would really, really, care about that, because I cherish that relationship, so I feel like the pressure would be a lot better, So I just wanted to comment on that.
Sometimes pressure is good, though. Is that what you're saying? Like,
Yeah,
would that be
exactly.
good pressure?
Exactly.
Yeah.
It's good. It's positive pressure.
Yeah, yeah. I think a lot of times people say that action is a result of inaction being more painful. It's kind of like with actually I was just watching a movie and somebody in there was an alcoholic, and they mentioned, like, in order to stop, actually get yourself out of being an alcoholic, like, the pain of being an alcoholic has to be more than stopping. And so I saw my parents, and I saw that there was a train coming. Like, there was no actual plan on the back end. Well, I need to give them credit where credit is due. They were hiding a lot of money under the bed, so to speak. Okay, but I just knew it wasn't going to do it. Right? They did a very conservative. We grew up overseas a lot of times. My dad had a U.S. salary, so we lived very well. But he was very frugal and kept every single dollar he could. Somebody. A financial advisor told him to put his money into the world's worst annuity I've ever had to experience. But other than that, like, he did really well as far as that. And that allowed us to launch into real estate the way I was able to do. And that first deal got me the confidence to go get an 80 unit and then a 71 unit mobile home park, and then now into memory care facilities, and now looking at another, like, that was a big domino. So, yeah, I don't know. Capital raising is, if I blew your mind, let's just talk about some action steps right now. It has to be, and I'm going to pontificate about this a little bit, because me and my team do a lot of like, how do you actually produce change in the company? How do we grow things? We talk about, like, lead and lag metrics. You guys familiar with this? Like, and because we're on the EOS, which I'm not going to get into, we call them scorecards. So there's, like, a thing you can control, something on the front end, and something you can't necessarily control on the back end. It's like, I can't control necessarily, will I get an A on my math test, but what I can control is how much homework I do and how much I study, right? And you got to reasonably expect that if you do enough studying, that you'll end up with an A on the test, right? So if you want to raise $1 million, what do you got to do? Well, statistically, maybe you just have to talk to, I don't know, 100 or 200 people. Okay, well, take your phone and say, every day I'm going to talk to 10 of these people. That's it. So that's the scorecard you measure every single day. Did I hit up 10 people? Did I hit up 10 people? And you know that without a shadow of a doubt, statistically speaking, eventually you'll raise $1 million. To a lot of you, $1 million might sound like the scariest thing in the whole world. Like, how in the world? Plus, now I'm responsible for these people's money. But, baby steps, and you'll get there. Like, and especially with how we teach things, like building a team, and and Tracy has been amazing. Like, just watching you grow, like, you going from really understanding your own value, plugging yourself into other teams, providing value to them, helping other teams capital raise, and now you're going to be like one of our certified one-on-one coaches in capital raising. And I'm really excited about doing the call next month. So anyway, just any saved rounds, any last things? Other than that, we're going to wrap it up. Anything you guys want to add?
I just wanted to put
Oh, sorry, go ahead.
Sorry, go ahead. I was going to put a quick plug in. I developed a little tool to kind of go side by side with partnering with Horizon Trust or NCH. Like, they're the Horizon Trust is the custodian, right? Like, they're the actual company that helps you set up your self-directed IRA, but they can't do anything inside your TSP account. Like, you have to actually go in there and move the money out.
Right,
and so
right.
Like a really simple slide deck with, like, pictures of, like, click here, go here, do this, because it's not a super intuitive process. So I would love to offer that to the audience. It's going to be at TSP2IRA.com. So TSP, the number 2 IRA.com.
What?
So isn't that sweet? I just found that.
Wow, Tracy, I'm so pumped for you. That's awesome.
So I will have that tool available. You can go there and download it, and then you use that in conjunction with setting up your accounts through Horizon Trust, and you can roll your funds right over. And then whether you want to start lending to somebody who's doing flipping, you want to get into a syndication, there's a lot of opportunities there for you to get, put that money to work differently. And that specifically works best if you're retired or separated. If you're still on active duty, you can't really move your funds directly into a self-directed IRA account yet. So just
right. Thank you for clarifying that.
Yeah, we didn't really specifically talk about that, but if you want to move your funds into a self-directed IRA, you have to be separated or retired first.
So traditional military, you made death by PowerPoint. Cool.
You got it.
Yeah.
We know what works. We know
Yeah.
what we know.
No, from like a business perspective, I'm geeking out at how incredibly good that is as a lead magnet, right? Because
Yeah.
that's awesome, Tracy. Good props to you. That's
I'm
great.
excited about it. We'll see how it does.
Yeah. All right. Is that it? We're all good. Thank you. I cannot thank you guys enough. I think we had a great discussion, even though kind of behind the scenes when you guys have no idea. I almost missed this call, but y'all stuck with it. Thank you all for being here for a full hour of some of the most action-packed, awesome advice, personal stories. This was Active Duty Passive Income's podcast. Thank you all for listening in. Please like and subscribe or whatever you do with podcasts. Listen to us again, and I'll see you guys in the next episode. Thank you, everybody. Take care. Bye-bye.
Thank you.
Thanks.